Happy Friday and good afternoon, everyone. Today I'm going to take a look at Icahn Enterprises LP common stock. This is one I haven't looked at yet on the channel, and I've very briefly taken a glance here, but nothing in depth, so it's going to be a pretty organic reaction to this company that I've seen a little bit of chatter about, and I figured might see if it's worth a closer look for you all. Now, the news surrounding this right now is that the guy that runs this, Carl Icahn, that the company's named after, he did a short of some kind, lost $9 billion, which, hey, go big or go home, I guess. And the stock is down over 10% over the last few days. Probably partly something to do with that. Now, this is, as you can see, Carl Icahn Enterprises LP. Okay. Now, that stands for limited partnership. So beware that if you were to get involved in something like this, you would receive a Schedule K1. Now, these are for basically partnership distributions. They get cataloged on a tax form Schedule K1, which the tax implications are a little bit different when you get paid on a K1 versus like a 1099 div like you would see for most of your other stocks that would have qualified dividends. So if you're considering something like this, or if you get one of these because you own shares of something like this, I recommend consulting with a CPA on that, just to make sure you're crossing your T's and dotting your I's. You wouldn't want to run afoul of the taxman. So with regards to this stock, I think one of the reasons it's getting a lot of play right now is, first of all, share price has dropped sharply. Secondly, it's the yield, right? Almost 25% yield on this stock. So people are wondering, hey, is this too good to be true? Is it a trap? Is this sustainable? And I've been taking a brief look over some of the financials here. Now, when it comes to the balance sheet, I'm kind of just giving this the old book value check, right? And now, to my understanding, if you buy these units, you are what's known as a limited partner, and there's about $12 billion in market cap, but about $4.6 billion attributable to limited partners. So it seems like no matter how you slice it, on the assets, you're paying quite a premium here. Now, if you add in every other slice of equity in the whole thing, you've got $9.5 billion. But even still, even if you were entitled to all of that, it's still trading at a premium to its balance sheet tangible value. So I question that a little bit as to whether that's a good thing. I would say that doesn't necessarily bode well for this being a value buy in terms of today. Now, let's see. Statement of operations, net sales. Seems like that is on the rise, but it's not necessarily the top line. It's how well you translate that into returns for your shareholders. And I'm seeing net losses attributable to Icahn Enterprises. I'm seeing just a lot of negatives here, except when it comes down to partnership units outstanding, which is basically the same as shares outstanding, right? This is 221 from 2020 up to 316 million units outstanding in 2022, with an $8 distribution per limited partner unit each year, which, if they're posting up losses per unit, I question how they're paying $8 per year per unit, except for the fact that, are they funding it with dilution? I really hope not, because that's honestly, like, that right there. I can't say for sure until I look at the cash flow and maybe get some input from people who understand. Maybe there's non-GAAP type accounting that maybe explains this, or that really more accurately measures this company. But that worries me. Okay. Let's see. Just more on those losses. I'm looking for the cash flow statement. Here it is. So we have 2020 negative cash from operations, and so we've got about negative $615 million in free cash flow in 2020. Basically zero free cash flow in 2021. And 2022, we've got about $700 million and change of free cash flow. Yeah, I don't see how the free cash flow over the last 3 years justifies that distribution either. So right off the rip, I really question where this is coming from. Okay. Now, granted, there may be non-GAAP measures that where they're using some kind of wizardry to actually pay this distribution out. I wonder if they might not be using something like return of capital, although I don't think it would show up as a distribution in the financial statements if that's how they were doing it. So I don't know. I'm a little bit weirded out by this, to be honest with you. And as such, I think this is a great example of being comfortable passing on something just because, to me, the numbers don't add up and make sense. Now, granted, if someone presents me with new information and tells me, hey, you're looking at this all wrong, this is the way you measure a company like Icahn Enterprises, I would be totally open to learning that information. But for me, if I can't at this point in time wrap my head around how it is they're paying those distributions, I can't determine a good price to pay for those distributions because I don't know that it's sustainable, right? The fact is, when I invest, I'm looking at what is the future stream of cash flow that this investment can provide to me over a long period of time. And I can't rightly say what it can do for me over a long period of time because nothing I'm seeing really makes all that much sense. All right. So this is a pretty easy, either, call it a pass, call it a too difficult to evaluate, call it whatever you want. But if I don't understand it, I'm not buying it, and I don't understand it. So that's where I stand right now with IEP. Though, feel free to throw comments down below. If you maybe know something about this I don't, if you own shares of this stock, subscribe to the channel. If you want to be part of the conversation on a more regular, ongoing basis, hop into Discord with us. We have a pretty lively group on there, several dozen people. And, we like to chat about ideas like this on a daily basis. I'll link that in the description below. Have a wonderful weekend, everybody. Stay safe.